Alright, I think I'm recording. So, this is the first time recording a Forex video, so bear with me, alright? My name is Enzo, I have been trading Forex for a while now, and I think I have built up enough knowledge to share a bit about what I have learned and what I know. So, we can go straight into it. I am using TradingView as my analyzing, where I'm analyzing my chart before I do trades. And this is the first thing you're going to see when you come into TradingView after you have picked your currency, for example GBP odd in this case. And this is an area, and as everyone else, mostly especially, use candles, and that's what I recommend as well. So we're going to use the candle for now. So at the moment we are on the daily chart, and the different chart is like the different time on each candle. For example, that's a daily candle, so it takes like 1 day to finish, and the less time, the less it takes for each candle. Simply explained. The reason we have on the daily is that we're gonna look at the trend. We can also go on the weekly just to get a bigger perspective, a bigger picture of it. And based on what we see, we can because we want to trade with the trend, right? So currently it looks like it's a downtrend, in my opinion. So we don't look for buy positions. We look for sell in this case. So we go back to the daily. What we're going to do first of all is that we're going to find the key levels. And what are those key levels, you may wonder? And that's like the round numbers. For example, we take the horizontal line. We can fix the coordinates later. Just put it on the round numbers. For example, 1.8, 1.9, 1.7, and we can put it as far as 1.6. Alright, so that's the key levels based on the numbers only. I haven't looked at any of the candles yet. I just put it based on the numbers. That's something you can do as well. It doesn't take that long, and by fixing the coordinates you just simply remove the last numbers. So it's a round number. Easy peasy. There, there, and there. Alright? Now, what's next? We're gonna put another key level, and we're gonna use the it's called horizontal ray, but we're gonna go on the 4-hour chart first, so you get a better perspective. So we haven't looked at the candles yet. We're just gonna continue putting the key levels, alright? So you go into horizontal array and you put it on 175, right? There. And then we have the next one here, a little bit there. And then we have one here, we can just put it here, 165, alright? And then, there we go. And then we can zoom a bit in. We could actually drag this all the way. Alright, let's do that. I'm gonna show you how interesting this is. Like this area. Around this area. Like this area. And then you can change the color, for example, style. We can make it like red. Yeah. Coordinates. Just be careful that it's a 5 number after the round number. And be careful you don't mix them up. Like that, and then style, put it red, for example. There we go. Then we have this one, red, coordinates, make it 5. If it's less than 5, go back to daily and zoom a little bit out. So it looks like this, all right? Okay, so what we're gonna do now, go back on the 4-hour chart, and I want you to look at how it respects those areas. Do you see that? Look. We haven't even looked at the candles yet. We just put the numbers simply as that. If you see, when it breaks, for example here, it respected. Then it went back down, went back up, went back down, almost to that area. It doesn't always hit the area, but around that area, if you know what I mean. It doesn't hit the line, but it can be around the line, okay? Here it finally broke, so it went up to the another line. Then it went back down to that line. Then it went back up, then it was around there, and then it finally broke, went up, went back down there, went up, went under. Do you see what I'm saying? We could actually make more and more and more up here, but we doesn't fill the chart too much because we want to trade here, all right? But the point is, do you see how it respects the area without even simply manually putting it there, just by the numbers? So what we're gonna do now is we're simply waiting for it to break a point. Either it goes back up, where we can sell at this area, or we wait for it to break, where we can sell again. Simple as that. And I just want to show you something. These candles have a certain pattern, all right? And that's based on, for example, in the Bible, it tells you everything. We're gonna, for example, look at this pattern. This pattern. It's a language. It's saying like, sell me. All right. So if we're gonna do a trade here, we're gonna wait for a signal to sell. And do you see this long wick? That's a sign to sell. Do you see that long wick? It's a sign to buy. It goes up. And here's not a long sign, long wick, but it's a pattern as well, and it's at the line. Here's a long wick, so it went down. And here, touched, up, long wick, down, and up. It's the same all the time. So, if you was going to do this trade, for example, here is pretty obvious what we will have been done. However, let's do a short position here. We saw this long wick, and this is the 4-hour, so we'll have entered here, right? Our stop loss will have been above here, and our take profit will have been around this area. Why? Because it's a key level. If it did break, however, it will have gone all the way down, but it did not. And you can close partial and put the rest at entry, and it actually did hit the entry, so you have taken like half profit and went on stop loss. And then you see it went back down, probably because it wants to go and break, for example. And we know it has been there once before, so it can go back down there. So that's, for example, 3.4. All right. Same thing, for example, here. You don't do a trade middle of the conflict. That's what we're calling it for. But let's say it went back up here, right? Short position. Let's say it went back up here. We got a signal which says I'm gonna go down, blah 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 blah. All right, I'm selling here. Where is the highest? It was here, right? Boom. After the candle, for example, like that one. Then you sell. Simple as that. Let's say you sold. Let's say you sold, for example. Let's say you sold around here. All right. You're a bit too late, so you sold there. And your stop loss is here. All right. You know that was the highest, so you can probably go back there. Blah 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 blah. So you sold at that area and went a bit down, and then it went back up, and you're already at drawdown, right? And then it went back down again and hit your take profit. So when this happens and you're in this area and you feel like you lost a trade, don't go in mid of the trade. Just wait for it to go back to your point, because at some point it will do that. So instead of 2.2 risk reward ratio, you will have had, like, because it went back down back there again, you will have 9 instead. Okay? So don't feel like you're missing out or anything. It's always trades, right? This here went on range, so you could actually just make a line here and think like this, horizontal line. So you could actually just put a line here because it was at this point, at this point, at this point, so you know it will have respected multiple times, right? So you put a line there, you could buy here, you could sell there, buy there, sell there, buy there, sell there, but that's not healthy. You want some good safe trades, and that's those at the key levels, right? Here we go, right? So we don't do any trades here. We're waiting either for it go back up here, because the round numbers are stronger than the half numbers. So it's a possibility it actually will go from here to there at some point, or it breaks and go up there, right? We don't know for sure, but we work based on possibilities, right? So we can put an alarm here, we can put the alarm here, and we just wait. That's our job at the moment, right? We wait for the candles to show us the possibility. Long wick, goes up, goes down, simple as that. And the stop loss is always under the long wick, right? So let's say this happens, okay? Let's say you bought mid of a downtrend, whatever. It's a risk, but it can go well. I have done it multiple times as well, alright? So I hit this point because it did it there. Let's say, if you drag it, it was around the area, but it hit there, it hit there, it hit there, hit there. You see what I'm saying? So you know for a fact that it can actually bump from this area straight back up. So you saw this long wick, and this is 4 hour based on each candle, alright? So this is actually a lot of pips. So it can be like one trade you do a day, however you get paid for multiple trades within less time on candles. Okay, so you saw this long wick. Okay, what it means is that it's here, sorry, long position. It went down, however it got rejected and went all the way back up here. So you could possibly buy here, and your stop loss is like around this area, and your take profit could be around this area. However, based on the key levels, of course. However, you can do a manual as well, and you can watch, okay, has the price bumped a few areas multiple times? Yes, here, right? 1, 2, 3, 4 here as well, right? So you could put a manual line here as well based on the price action, right? Around this area. If you did that, all right? If you did that, so here is like 6 rival ratio, here is like 4.5, and it actually hit your take profit. Simple. All right, and I think that's enough for now. I want to do a 10-minute video. It's 15, but I hope you learned something. If it's something you are wondering about, something you have questions about, just ask me. And I think this is a good first video, and they're gonna progress, and it's gonna be better and better over time. All right, guys. Peace out. Stay healthy. Happy New Year's. Take care.